Okay, so coming into today, we were just trading all-time highs. Um, in the pre-market session, we had broken the regular trading all-time highs and put a high in right here at the 36 and a quarter. Then we sold off from that. This candle right here was CPI. Then we sold off from that, and at the market open of today's session, we did not get a continuation towards the upside. So we broke below yesterday's high of day over here at the 25s, 7025s, and we stayed below it. And then we kind of sold off from that area. There were some aggressive sells at the market open. Yeah. Right here at the open, you can see some pretty aggressive selling there, and some absorption going on right here, and more aggressive selling to the downside had occurred. So that kind of continued throughout the early hour of the session. And you can see here there really wasn't a significant pullback long. There was a kind of, I guess you could say, some strength here, but it got shut down. You can see here 964 volume. That got shut down again, which is very, very good for a bearish continuation. But what I was watching was this green rectangle right here, which is the 6988s with this yellow line. And basically this level was just a level from yesterday where there was a significant amount of order flow activity and from the buy side. And let me just go to the market right here. The 88s was also kind of the start of this low volume node. This was sort of the start of it, and that's like right around the 92s to like call it the 84s, right? And so really in this zone, there was a couple of things, right? We had the buyers from yesterday. Then we had this low volume node on the 30-minute volume profile. And we're combining the fact that it didn't have a proper pullback long. So I took this trade based off of the footprint chart. And so basically what I saw coming into the zone here, and this is the same level, this green rectangle is the same level as this yellow line here, which was the key level for today. The 88s, right? This spans from the 88s to the, call it 82 and a quarter. And up until now, again, we had not had a significant pullback long to the upside. So what I was seeing is very aggressive selling. You can see right here, very aggressive selling right here. 1392 contracts. Then we have 207, 272, 222, 236. So these are at bid trades hitting at my key level, key zone. And I take this trade at 9:30 and 38 seconds. So I'm going to play the tape now. And I'm going to put at like 5 speed. So you can see here at this moment, see some buying coming in right here, and I'm gonna put it back to normal speed now. And again, at 9:30, I take this thing long. Basically, what I liked here was that the buying started to step in. You can see that we came into this zone. Once again, we had these aggressive sell prints here, tried to bring the market down further here, and again, now we are at this key level, which is this green box right here. And then this footprint bar had aggressive buying, as denoted by this green closure here. This means that it closed at the high. So we opened right here, we tried to sell off, we failed, and then we aggressively closed up here at the high, along with 271, 234 trades that hit the offer. Then over here, the buying was continuing. Now this is the most important part, right? It's after we get this buying, it's how do we continue on the next footprint. So essentially what I was watching here was to see if buyers would support this market and continue to hold it up. And so that's kind of what we were doing here. I entered at 9:30 and about 38 seconds. So we get, we're trying to push. What I liked was how we came in. We tried to break past these buyers here, right? We failed, right? We failed to really get a sell off into these buyers. So that would validate that these were actually new buyers coming in. Well, I don't want to say validate that they were new buyers, but just validating that the buyers here were actually defending price and not just, because one can make the argument that this is maybe just sellers taking profits. But because we were defending this region here, while it was in a key level support zone, that was enough for me to go ahead and put risk on at this level. I wouldn't really call it a B shape. It doesn't really look like a B shape. Maybe if I zoom in a certain way, it does. Not really. I don't really have a playbook to name this, so that's kind of a bad thing on my end, but I essentially am long right here at the 90 and a quarter, and now a B shape is beginning to develop here, which is really good, which is something that I like to see. And now I'm going to play it at 10 speed. I'm going to pause it first. So because I'm long here, I put my stop loss at the 87s, which is like right here. And the reason that I put my stop loss at the 87s is because maybe it was the 86 and a halves, which is right at this delta outlier right here, because my thesis would be invalid below that, because that would mean that the buyers are no longer defending this area right here. But I was open to re-entering if, let's just say, we stopped me out and then we again held this dip here. I was open to re-entering that trade again over here, and then to capitalize on upside movement. But and then also one more thing, the target that I had was basically the 7005s, which was this guy right here, which is exactly where the absorption happened. You can see right there, 837 contracts at that level. That was kind of the next level in the order flow that I was looking to go target. And something unfortunate happened, but we'll go ahead and mark the target here. If we go to tools, horizontal line. Yeah, right there. Is there a way to make this thicker? I'll put it like 4. Change it to yellow. Right there. So that's my target right there, the yellow line. I'm long right here, and I like how the buying is building. You see how it says 341 delta for the buy side. It's building there, and this is on 10 speed, so the buying starts to kind of pick up, and we do go up from then on. And my stop loss again is at the 86s. We're currently trading 94s, and kind of just begin to make an attempt toward the target that I had. Again, look at all this increase in buying volume that I really like to see, right? 363, 257, 248 right here, 207 right here, 313, 273, right? All that is really, really good to see. So we kind of get all the way up into the 7001s, and then the reason that I was a little bit scared here was because, and I'm just going to speed this up and show you what I was looking at 938. Right here, you can see we came up into the 700s, and the problem was there was it looked as if there was some selling that was picking up here. Okay, so I'm going to play it now, and you can see selling really coming in here. We're trying to fight it. Buyers are trying to fight it, but they ultimately rendered unsuccessful. Got out of this trade at what time? 9:49, right? So put the clock right here. It's out the way. Again, look, I don't like to see when buyers are trying and then they fail, and sellers kind of shut them down, which is kind of exactly what's going on right here. Same thing on the heat map too, but this was more so a footprint chart trade, so that's why I'm kind of focusing on the footprint rather than the heat map. But eventually I get stopped out here at break even. I did move my stop loss to break even at that point, so right around here is where, right there, 2 quarters, I got stopped out there. And the unfortunate part about this trade is if I speed it up to, I'm going to do 15 and play it, the take profit, we rally from there, and we eventually do hit my take profit here at the 05s, put it at 30 speed. A little bit of a fight, but we do end up eventually hitting the 7,005 price level, which is unfortunate that I was not part of, even though my analysis on the market was correct. I had stopped out break even. Hold on, let me play it till it hits it. You can see it was quite a tug of war right at that 005 level, but we do end up hitting it right there, and that would have been a solid trade. It would have been a $725 profit, but and it would have been a 4-hour trade, but unfortunate things happen. So the one thing that I guess I could have done better is to not have moved my stop to break even, but the problem was it really did look like a red flag, especially here when I played on the heat map. When I play the tape at this 4x speed, you can see here it looks like a seller is building a position, because we get that rejection there and then we kind of have this aggressive selling come in and we stay there. And we just kind of consolidate here, which is not something that I'd like to see. And it really looked like somebody was accumulating a short position there. And my stop is right here at the 90 and 0.50, 2 quarters, and eventually I do get stopped out. Oh, sorry, my original stop loss was here at the 87s, but since I entered at the 90 and a quarter, by that point I thought that if we sold off underneath this bid at the 93s, 92s, then it was appropriate to just go ahead and get out at break even, because at that point, if this support failed, then it probably would have hit my stop loss. So that's what I was thinking. And of course, we just take me out at right there at the 90s. And we go to I don't think we actually hit my original stop loss, because my original stop loss was at the 87s right here, so we don't actually hit that. So actually the trade would have worked out had I have kept my original stop loss. But again, at this moment looked like it was an active seller, which was not good, right? To me, this was a red flag. And so at the moment, I made the decision to go ahead and get out at break even, which was right here. Break even was right here, especially because we broke that support right here. Right after we broke that support, I was like, okay, this thing is gonna hit my stop loss, but which it never did, and it was a very odd day, I'd say. But we ended up getting me out break even, and then we rallied towards the target again, which was the 705s right there at the green line. A little bit higher than that, but 705s. You can see we did end up hitting the 705s. Yeah, right there. So I'd say that the analysis on this trade was decent, because I did catch the buyers and the book flipping from this reversal, but just unfortunate that it had to stop me out at break even and then continue to go upward. But that was the trade, and it wasn't a specific playbook. It was just something that I kind of put risk on. You see here I was upwards of $437 at one point, but it wasn't enough for me. I was going for the 705s, which it did end up hitting, so I wasn't wrong with that target either. It's just, one of those unfortunate days. So that's all I took today, just the break-even trade.